President Xi Jinping has promised to open up China's economy to the world, and he's warned against confrontation as his country is on the brink of a trade war with the US.
A Cold War mentality and zero-sum game are more and more old-fashioned and outdated.
After a week of escalating tariff threats with the US, Xi pledged to reduce taxes on imported cars by the end of the year, ease restrictions on foreign ownership of companies in China's auto, aerospace and shipbuilding industries, and strengthen intellectual property rights.
I want to tell everyone clearly that the door of China will not close. It will only open wider and wider.
These are things high on Washington's list of demands. On Monday, President Donald Trump was more combative, saying on Twitter,
"When a car is sent to the US from China, there is a tariff to be paid of 2.5%. When a car is sent to China from the US, there is a tariff to be paid of 25%. Does that sound like free or fair trade? No, it sounds like stupid trade, going on for years."
World leaders at the forum warned against a major trade dispute.
A trade war between China and the US is still far from inevitable. But if one does happen, it will undermine the multilateral trading system, which has underpinned global prosperity. Countries big and small will be affected.
Critics say China hasn't fulfilled earlier promises to open up its economy, but stock markets have responded positively to Xi's speech. It's unclear if Washington will follow suit. Liz Maddock, TRT World.
Well, Patrick Falk has been following the story and sent us this update from Hong Kong.
Well, Xi Jinping called it a new phase of opening up, and certainly investors seem to take that as a new phase for equity markets as stocks across Asia rose sharply following all the recent negativity over trade between the US and China. There was, of course, some concern that Xi might have taken a tougher stance today, not wanting to be seen to bend to the US in his opening address at the Boao Forum in Hainan, but in a measured speech, he warned against protectionism and seeking dominance and rolled out a series of measures that helped lift markets. Automakers were among the big beneficiaries after he pledged to remove car import duties. So we saw in Japan the likes of Toyota and Nissan and Honda all rise sharply. Chinese automakers struggled a bit today, though, as the lifting of limits on foreign ownership of Chinese automakers was seen as a negative for them. Tech stocks advanced after Xi pledged to strengthen IP protection in Hong Kong. Tencent, AAC Tech and Sunny Optical were all among the big winners there. Hong Kong listed and China mainland listed banks and insurers all soared as well after Xi promised to accelerate reforms in the financial services and insurance sectors. One area that did suffer today, though, Hainan-linked stocks. They were among big losers. There had been talk of a free trade area to be set up on the island, which had actually boosted stocks in the run-up to the speech. We saw stocks like Hainan Strait Shipping and HNA Innovation advanced in previous sessions, but the failure of that to materialize saw some money come off the table there.
Well, joining us from London is Chris Torrens, a senior partner at Control Risks, the global risk consultancy firm, to discuss this in more detail. Chris, thank you very much for talking to us. I want to start by asking you, just a few days ago, China warned that it would continue retaliating against the US for any new tariffs. Now Xi Jinping seems to be backtracking slightly from a trade war. Are there mixed messages coming from Beijing?
No, I don't think so. I think President Xi's been quite smart, actually, because he may have given US President Trump what he wants. What Mr. Trump needs is a demonstration that he has got tough on China. He needs tangible results so that he can show he's a tough leader before the midterm elections, which are coming up in the US in November. So he may have actually given Mr. Trump what he wants. But if you look at what Mr. Xi Jinping was saying, he's not actually saying anything particularly new. We've had talk of opening up financial services, of easing the 50% cap on ownership of automotive JVs in China before. That happened last year after Trump's visit late last year. So I think Mr. Xi's been quite smart in terms of spinning some attractive options, but nothing really new there. We just have to wait and see if Mr. Trump feels that that's enough to give him the support he needs before the midterm elections in the US.
As you mentioned, China has made certain, perhaps not promises, but alluded that it might change its policy in the past. Do you get any feeling that it's different this time around and that they actually mean what they're saying?
Yes, I do, actually. I think that perhaps they're not being rushed in the way that the US would like. There's constant international and specifically US pressure to open up markets and sectors in China, but China again has been quite savvy in terms of opening up its non-strategic sectors fully to foreign investment, because of course it needs foreign direct investment to fuel its economy, to bring wealth to its people and to ensure that that economic growth keeps going, because that's the justification for the Chinese leadership continuing to rule. But they've been very careful about opening up more strategic sectors. We do think that there will be some movement, as Mr. Xi promised, in the automotive sector, and that will obviously be good news for European and US auto manufacturers who make up the, they're the key players in the JVs in China. So we do see some movement there. Not so sure about financial services yet.
And what do you think if the Chinese economy does open up, albeit slowly, bit by bit, what will it mean for the economy and the global economy as a whole as well going forward in the short to mid-term?
Well, the world needs a fast-growing Chinese economy, perhaps not one at the double-digit growth it's enjoyed over the last 30 years. I think sort of 5, 6, 7% is still pretty good, and they're contributing a huge amount of GDP growth to the global economy, so that's essential. We do know a trade war would be a lose-lose. It would take us in the direction of nationalism in terms of transactional trade agendas from the side of the US. We need a strong World Trade Organization, and we need global rules as well. So I think this move by Xi Jinping allows Mr. Trump to walk away and be comfortable that he looks like he's won something, and it allows Mr. Xi to look a bit more like a senior statesman, like the grown-up in the room, as it were. So hopefully both sides will benefit from this, and we'll avert a trade war.
All right, Chris, thank you very much for your insight and sharing it with us here on Money Talks. Thank you for your time.